Come on in, folks. Come on in. Are you late today because I am early? Is that what it is, folks? Come on in and let me know if I'm audible. And then we will begin the show that we deserve. The show that we deserve, right? So good we can't take a break. Let your comments roll in. And then we will begin the analysis of the day. Right? Miss Shivani Rajgaria says, "Good morning, you're audible. Perfect. So we should begin." Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we got to follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail. And all we need for the simultaneous sip is a copper, mug, a glass, a tank, a chalice, a stein, a canteen, jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Nice. Let's do it again. Beautiful. Beautiful. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. That's such a beautiful thing to say. With that out of the way, let's begin. For SATCOM companies, Sky may have a subscriber limit. So we've been talking about how telcos and SATCOM companies have been fighting a little, right? So telco companies have been saying that these SATCOM companies could steal our business, so they could get a backdoor entry into the mainstream market. And kill the telecom players. That's been the main contention of the telco players. Even though telco and satcom have a very, very weird relationship. So Bharti has its own satcom operator called OneWeb, right? Eutelstat. It's a French company. Bharti is a very big shareholder. That's Bharti's company. Then there's Jio's, satcom play. But both Bharti and Jio have decided to be distributors of Starlink, right? Which is Mr. Elon Musk's SATCOM operation. So while these companies have their own SATCOM players, they also are distributors of Starlink. Now, which is slightly complicated. However, what's more complicated is despite them having their own SATCOM operations and them being distributors of Starlink, their telco play comes under threat with the implementation of Starlink in the Indian markets, because Starlink offers a very very unique service, right? And it offers independence from the telcos, right? So they had been talking about how Starlink should get some sort of uh, you know telco like treatment based on AGR percentages. So adjusted gross revenue, a percentage of that has to be given by the telcos as the license fee, as the spectrum fee, and so on and so forth, right? Nothing like that for Starlink, nothing like that for Satcom. So they lobbied a lot, tried in that direction, but then it didn't happen, and then they ended up like tying up with Starlink, right? So they've been worrying that Satcom as an operation could cannibalize their bread and butter, which is the telco play. Now, that wasn't really flying with the government, right? The government said that, hey, Satcom is very expensive. You get a Starlink terminal, it's an expensive play. And then its monthly fee is also expensive as compared to what you are offering. So, this particular play will be always a little more expensive than what you're offering, the telcos. And so, you don't need to bother about competition or cannibalization of your core product, right? But the argument against it was that, hey, this is cheap right now. Just because it's cheap right now doesn't mean it's going to be cheap forever, right? Because costs can be optimized, and costs are generally optimized in a play like this. So everybody knows that. So, what finally they've come up as a solution is they have put a subscriber limit on Satcom players. So it reminds me of the command economy. When produce used to be rationed, essentially, there's only so much that you could import and so on and so forth. So they've put a subscriber limit on Satcom companies, curbs aimed at protecting telcos against backdoor entry in mobile broadband space. So this is a very interesting development. This is how businesses are protected or businesses are ushered in an economy by the government. So this is all government. If you would have left it to the market forces, maybe telcos would have been screwed, right? Maybe telcos didn't exist if you would have just used market forces, or maybe if telcos existed, they would have juiced the customer in a very very weird way, right? So this is an example of how uh, like a totally free market is a myth. You understand? This is one example which shows that outcomes in businesses are mostly, uh, you know, the government or let's say the political dispensations will. So, center may limit the number of subscribers being served by a particular satellite system, Starlink, Amazon Kuiper, Eutelstat, OneWeb, or GeoSCS. The proposed curbs are aimed at addressing concerns of incumbent telcos that believe Satcom companies could enter retail broadband space through a backdoor by using Satcom permits to grab a large user base. So we've talked about this enough and a lot. Even in before these developments were happening, we were saying, hey, we were observing this as a developing story. So we in this 100 days, this story has changed from telcos opposing Starlink to Mr. Musk and Mr. Donald Trump getting, close to India, to Mr. Elon Musk and Trump's influence affecting Indian government's decision to allow Starlink. So firstly, they weren't allowing Starlink. Then because of whatever happened with US political dispensation, the government actually allowed Starlink. And then instantly, as if everything flipped, we heard that Bharti and Jio are going to be distributors of Starlink. And then next news is that we are seeing that they're going to put a subscriber limit to Satcom. So if you look, as we always say, viewers of Thinkers Frequency would remember, you got to look at history as a process, right? Not as a piece in a museum, right? You don't look at history or you don't study history as a museum piece exhibition. You look at it as a process. So if you look at this as a process, you would understand how politics and businesses have intertwined and how the journey has happened, right? It's just phenomenal. It's a very, very good example. I hope you, could understand. I hope all the viewers are clear with this. This is a pretty phenomenal development. Moving on. Uh, Inflation has cooled down, but experts see status quo on rates. So Indian inflation is pretty much in control, right? Which led to, in fact, some wholesale indicators actually went in a deflationary zone. The price plummeted. They degrew, right? So inflation is pretty cool right now, which essentially made people discuss the possibility of a further rate cut. Is it possible that India could have a further rate cut in the play, right? So people are saying that this is gonna be a status quo kind of a situation right now, because even though inflation is cooled down, uh, rate cuts don't really need to happen right now because the previous rate cuts are just getting translated. And also when you decrease rates or when rate cuts happen, the bond prices change, right? And the bond markets get destabilized. And also, when rate cuts happen, banking also changes, right? The net interest margin changes. There's a lot of things that rock the boat as far as rate cuts happen. So while rate cuts are a very good news, rate cuts are essentially done to spur economic activity, because when you cut rates, more lending happens. When more lending happens, more business happens. When more business happens, more jobs happen, and so on and so on and so on, right? So when an economy needs to grow, uh, you consider rate cut as an option. But right now, the experts, I mean, who cares about the experts, but the consensus is that it's not going to be a rate cut situation right now in India. However, in US, the Fed is going to cut rates. The Fed is going to cut rates. So we've seen this coming. Now again, this is a history, uh, a stream of historical events that are leading to this particular play. So Trump has been talking about a rate cut for a very long time. He's been saying that, hey, look at India, look at Russia, look at even some Europe. They've cut rates. We need to cut rates because we need to grow. The inflation is in control. US inflation was 2.1, and then it came to 2.9. Pretty stable inflation rates for US. So he said that you need to cut rates, right? But Jeremy Powell, Mr. Powell, the Fed chief, he is basically not of the view. He was not of the view that rate cuts should happen. He said at the moment, at the time, that we are going to look at rate cuts and this data non-politically, right? Non-politically. So then Trump hurled abuses at the Fed chief in quite an unprecedented fashion. He said he's Jeremy too late Powell. He's a stupid person, a moron, quote unquote. He's too slow, and so on and so forth. He gave him these nicknames. And then the jobs data came out and it wasn't as pretty. And then Trump said, you gotta, reduce rates. You need lending to happen. We need more economic activity. And now, since job data has sort of given a clue in that direction, Powell is actually going to cut rates on Wednesday. On Wednesday, just on Wednesday, right? In this week, particularly, there's going to be a rate cut news that comes from the Fed, right? Which is going to lead to some stock market rallying and so on and so forth, which is going to be great news. But if you look at it historically, this is what Trump was saying like for 3 months now, more than 3 months, 4 months, 5 months, right? Maybe 6 months. So he had been talking about a rate cut and it's going to finally happen. So India was very proactive in this game. That's nice. Moving on. Cash on scan money anytime, anywhere. So, the government essentially is looking at, NPCI is looking at something called cash on scan using BC. No, I didn't hurl an Indian abuse. BC is business correspondent. So they're using business correspondent to essentially create an alternate ATM. So there's, let's say, a shop, you scan that shop, money goes out of your account, and then cash can be dispensed. So that's the play that they're essentially, you know, moving on, moving to. So it's basically cardless withdrawal. Right now, cardless withdrawal can happen using UPI, but it's only select ATM machines, right? Now they want to disperse it. They want to democratize it. They want to use lakhs and lakhs of business correspondents to make it happen, which is a pretty innovative scheme. Now, why do you think it's happening? Why do you think it's happening? It's happening because uh, the cost of managing ATMs is a pretty big way down, right? It costs a lot of money to actually manage ATMs, to actually conduct, store cash that way, securely transfer it to some place, and so on and so forth, right? They believe that this could be a more democratic way. Now they say that it's not going to hurt ATMs because ATMs run round the clock, right? Uh, 24 hours and so on and so forth. BCs won't run round the clock. It's so awkward. But this is the abbreviation that they're using, so that's what I'm doing. I'm not. This is not my mischievous, work. But any incentive for the BCs, it's even more awkward for when I read it from Mr. Tawari asks any incentive for BCs. So they're laying it down. They're laying it down. It's work in progress. There's no clear incentive to be a BC, but they're just imagine, like what I'm seeing is, if this certain obviously there's going to be some onboarding cost that they get and so on and so forth. However, it's not going to be a big money minting operation, but some sort of an engagement, uh, affair. So the BCs will gain, definitely. That's how ATMs gain, right? But how and to what extent is it financial more than an engagement tool remains to be seen. So this is something that has been proposed. It's an interesting idea. I mean, what do you think of this idea, right? I think it's okay, it's fine. Mr. Tiwari asks, a better abbreviation shall be used. No, a BC needs to be called a BC. But the point is, I think that cash is pass, right? It's cash is yesterday. So all the things that are being done in this domain, it's good. It's good, but it's like a footnote in the story right now. I believe, even though, so people thought that cash transactions are happening in UPI, 20 billion transactions and so on and so forth. It's just huge. Cash will decrease, but the cash is not decreasing in supply, right? There is a lot of cash in the market. It's just that the regular users are shifting to formalization of economy. So a very interesting facet which happened in this case was that all the shopkeepers starting using UPI, right? They started getting income tax notices because they were doing a lot of business, and all that business was coming through UPI. And these people were always anti-tax, right? The small-time retailers, and they started going away from UPI. So what they try doing is managing many accounts, right? But they deal in crores, so they can't escape tax, and that sort of puts people back into the cash game. However, how much can you escape? Customer convenience will have to be adjusted for, right? Which is what's happening as far as this play is considered. But interesting scheme, getting a lot of BCs in line. Moving on, IFC plans to double down on India investments in next 5 years. IFC, that's International Finance Corporation, right? We recently talked about IFC's investment in the e-bus play. You remember? A couple of days ago or 3 days ago, we talked about how they were like investing 137 million in e-buses. Now 137 million was structured in a very interesting way, where 100 million went to JBM and 37 million was given as mezzanine capital to Evergreen, right? I guess it was Evergreen. So mezzanine capital, we talked about mezzanine capital and how it's very interesting, right? Mezzanine capital is essentially debt which can be converted to equity. That's fine, but it can also be paid in kind. What it means by paying in kind is that you can defer the interest payments and add them to uh, you know to the principal. So let's say you take 100 bucks and 10 rupees you've got to pay yearly interest. So if you can't pay yearly interest of 10, you can add 10 to the principal of 110. Now principal becomes 110, right? And then it can balloon, right? But then you can convert it into equity. So mezzanine capital is a pretty interesting debt instrument. The returns are high for the lenders, of course, but the freedom to the borrower is also unparalleled. So mezzanine capital, pretty interesting play. So these people, they've interviewed Mr. Makhtar Diop, who's the MD of IFC. He says we're going to commit up to $10 billion. Annual commitment of $10 billion, up from 5.4 in FY25. He says that Indian economy is growing like nobody else. It's a $4.2 trillion economy which is growing at 6.8, could grow at 6.8, and if it grows at 6.8, we've got to have our concentration there, right? So people ask, like, what are you gonna invest in? He says green energy, clean energy, even logistics, some data center operations, and so on and so forth, right? We're going to deal with smart cities and so on. So they said that all of these investments going to be sovereign backed, right? So Mr. Makhtar Diop said that no, it's not just going to be sovereign backed. In a lot of cases, we are actually directly dealing with municipalities. Now that's very interesting. That's very interesting. If a global organization or a global financing corporation can actually deal directly with municipalities, it's awesome, right? It's brilliant. So he says that we worked with Brazil, and in Brazil, a lot of money we actually worked on was dealt directly with municipalities. What that means is, instead of coming from the center, states and municipalities could compete and could pitch to get investments. So that's awesome if Babus work well, right? That's a big if. That's a very big if, but that's interesting, very interesting. So they're talking about skill development as well, which is also interesting. Speaking of, what's interesting, Tata International has tied up with, Mercuria. Tata International is a trading operation of Tata, and they've tied up with the Switzerland company, which is gonna be like a 51-49 joint venture. So Tata is gonna be 49. This comes amidst trading losses for the commodity firm. They made like losses of 400 crores in the last fiscal year or something. So they are essentially looking at this. This has been driven by Mr. Noel Tata. Speaking of a lot of action happening as far as private equity deals are considered, right? We are very surprised. We talked about how it's very surprising that a lot of green energy companies like solar energy companies are actually exiting India. So you remember that a lot of solar companies were actually looking at divesting their stakes in India, and how that's pretty strange, right? Why would a solar company look at divesting from India at this stage, especially in under construction projects where it hasn't been utilized and so on? Why would they sell so early? So that's something interesting. But in that line, Serentica has acquired Startcraft's solar biz at an enterprise valuation of $250 million. So 250 million is about 2000 crores, 2000 or some crores, right? So they are acquiring, has outbid Blackstone. Blackstone was looking at buying it, but Startcraft's solar power generation business for 220 to 250 million dollars. Startcraft's is world's largest solar play, and the reason that they've stated is it's a Norway company, Scandinavian company, that they are gonna use the proceeds to actually focus on their home market. But why? Isn't India greener than Norway as far as this whole play is considered, or let's say the prospect is considered? Or maybe they're just getting a very very great deal, but it doesn't look like that. So this was announced in April. It's finally happened. These things happen. These things take time. We discussed this back when Blackstone fray, was in the fray. You remember? We had this conversation. So Grow is going public. Grow is going public. IPO in the range of 700 million to $1 billion. No company has made money. No business has made money like the stock operators, right? The brokering business. They've made money like nobody else. We've talked about how Zerodha grew as a bootstrapped operation. What's interesting is Zerodha grew. Zerodha was founded in, I guess, 2010, right? So when Zerodha started with a fixed fee brokerage model, there was Angel One, there was Angel Broking as a business, right? Angel One didn't exist. Nobody competed with Zerodha. Nobody competed with Zerodha. Nobody came in the business of Zerodha. Why? Because the market was too small, right? Too small. We just discussed a couple of days ago, or maybe a week ago, I don't remember, but we discussed how in 2020 there were just 5 crore demat accounts, right? And in 2025, guess how many demat accounts are in 2025? We discussed this. So can you guess? Can you remember? Or if somebody doesn't remember, can you guess? In 2020, we had 5 crore demat accounts. How many did we have in 2025? So the answer is 20 crore. 20 crore. 20 crore, Mr. Tiwari, you're right. So 20 crore. The way I said 20 crore made me remember of that. Remember that meme. 7 crore, which is an Amitabh Bachchan meme, right? Ki aapko milte hain 7 crore and stuff like that. But anyway, the point is 20 crore is the right answer. But in 2010, the number of demat accounts was like in lakhs. Okay, very small market. So while it was a very small market and the fixed fee brokering business didn't look that green to anybody, so no competitor came. No competitor came for almost a decade. So Grow was funded by these people. Grow entered this business back in 2018 and 19. Angel One came in 2019. For 8-9 years, Zerodha had a competition-free zone, like no competition. Like no competition whatsoever. It was basically the sole player who was who was cornering this market, and every year it was doubling. So if you look at Zerodha's financials from 2010, they began with 10 crores, 20 crores, 40 crores, 80 crores, 160 crore, 320 crore, 640. That's how they grew, right? 640 crore to 1000 crore. So you would expect like a 100 million company to not become a 200 million company in the next year, right? And they did that. So they were basically doubling with 50% net margins, by the way. Net profits of 50% because nobody came in the fray, right? And that's why Mr. Kamath is so kind to say that, outcomes in businesses are mostly driven by luck. But anyway, Grow came out. It's a VC product. So they blitzscaled themselves and they are now a pretty solid company. They don't make as much money as Zerodha. They have more clients than Zerodha, more demat accounts, and more demat accounts get opened by Zerodha. In comparison to Zerodha, Grow has more, but their active client base is not that big, right? So Zerodha is still India's largest brokerage firm by trading volumes and so on and so forth, because active people are still with Zerodha. And Mr. Kamath recently wrote a post that we don't want to advertise. We don't want to have that kind of a customer acquisition mindset when it comes to people. We don't want to upsell them anything. We don't want to make them trade when they shouldn't. So Zerodha is like an extremely ethically built company, right? Where it says that we're not gamifying trading, right? We're not like Robinhood. We were pioneers. Robinhood came later. So Robinhood, what it did was like incentivize trading. It gamified trading. So they said that's very dangerous. We are very happy if the people are not. And they sort of warned people about stocks, right? So they want to protect people's money. At least, the vision is to help people invest better and not trade more, because every trade makes some money for Zerodha. So they don't actively push that kind of mindset. So Mr. Kamath says that we don't want to advertise, because if you advertise, you look at customers, you know, uh, uh, thing, and we don't want to advertise. Now, I think personally, Mr. Tiwari says Zerodha has an active YouTube game now, supporting many channels. Yeah, sure. Zerodha has an active game. Mr. Nikhil Kamath is also very active. They're supporting mission driven YouTubers and whatnot. But I think, and their own channel as well. But I think Zerodha is missing out a lot because of this no advertising stance. Now I'm nobody to say. I'm just a man on the street. Mr. Kamath is a billionaire. I respect so much, right? So no advices to Mr. Kamath. However, I think Zerodha is missing out. Advertising is not innately a bad thing. Advertising has the potential to shape cultures. It has shaped cultures before. Advertising has been the cornerstone of cultural conversations and cultural movements, right? Zerodha has the potential to actually begin well meaning advertising. So, what's the problem with YouTube based that kind of content, the education content, is that its reach is very, very low, right? Its reach limits to a certain segment of society which is looking at that kind of content, right? Zerodha has the potential to actually, you know, compound its brand equity with conscious, well meaning advertising. So I'll say that again. Zerodha has the potential to compound its brand equity with conscious, well meaning advertising. And advertising doesn't need to be a cringe show, right? It doesn't need to be that. It can be a very, very good cultural movement, like an education kind of a play, right? Where which is Zerodha is just missing out on all of that because it's not advertising. And in August, like last month, 20 lakh demat accounts got added, and Zerodha is like visibly going lagging behind as far as these numbers are considered. So its defense is that whatever these people are getting, they are not active traders, they are not good customers. Good customers will come to us because creme de la creme, we are at the top of the tree, so we'll remain there because we'll attract and so on and so forth. That's good. But somehow, if you are doing such good work, you need to educate people as well. And sometimes education needs to be very direct and in an advertorial kind of a way, which you've got to be beyond your current circle. And Zerodha does such good work, right? They invest in so many companies, a lot of CSR initiatives. All their Rainmatter fund is essentially CSR, right? Very conscious investing. So they could use all of that to essentially move past grow. But at the time, it looks like it's happy being let's say getting delegated to the second position, or let's say the third position, whatever, because all the other people are going to advertise, and sooner or later they're going to get people who might just become active clients, right? So you can guess, as a business strategy, what do you think makes sense, right? You can think about it. Moving on. Yes Bank deal is getting some tax break for people, the banks who invested in Yes Bank in 2020. Viewers of Thinkers Frequency, remember, Yes Bank was a Mr. Rana Kapoor project, and it was like a competitor to Kotak. That was its brand equity. It had a real big franchise value. It was a key player. It was a pioneer in technology-led banking. It spearheaded the UPI revolution with PhonePe. So Yes Bank did a lot of good work, but then there was also a lot of provisioning issues, some sort of misappropriation of funds, some lending to bank bad players, and so on and so forth. The government and RBI said that, hey, you have provisions of 9%. They said no, it's just a matter of different accounting. But then government came in, got involved, and they literally took him out, Mr. Rana Kapoor. When they took him out, right, Rana the bank crashed, right? From 437 to $10. The stock just crashed like this, right? People lost basically all the money in that bank. When that happened, government had to get SBI involved to sort of salvage the situation and save the depositors' money and so on and so forth. SBI became like a 49% partner or something. And also other banks invested in Yes Bank, right? They were mandated to invest. And the deal that they got was that whenever the bank gains, there'll be some sort of a tax break kind of a situation, right? So that's what's happening. SMBC is buying 20% for 1.6 billion, 800 million, $8 billion. Yes Bank is basically valued at $8 billion right now, right? And group of private banks from stake sale will be exempt for tax in September quarter. So that's what's happening. Interesting. Now this is gonna have some interesting ramifications for banks because private banks have been struggling with net interest margin gains, right? You remember that? So private banks have been struggling with net interest margin gains, net interest income gains. Now that is going to get offset by one-time payment from Yes Bank stake sale, right? So you're gonna see an other income on their quarterly reports, which is gonna look good, and the stock is gonna go up, right? Way to look into the future. Moving on, speaking of stocks and everything that's going on in the stock market, gold has outshined a Sensex returned by quite a lot, right? So in the past year, in the past 3 years, in the past 10 years, it's been incredible. It's been an incredible run for gold. And we've been talking about how gold is a hedge against geopolitical instability, against dollar's weakness, against global financial risks. Gold is a hedge against all that. And in the past 10 years, it's been really going on. So look at the numbers. In rupee terms, the yellow metal has delivered a 50% return over the past year compared to 1.2% decline in Sensex. So Sensex declined 1.2%. Gold went up 50%, right? 50% return in rupee terms over the past year. Now, if you look at, a lot of this is basically central banks have been holding gold. Every central bank is basically holding gold. So we've talked about global currency for transactions and global currency for store of value, right? Global currency for store of value is definitely gold now, right? A lot of central banks are continuing gold with 25% purchases coming from central banks. Now, if you look at 3, 5, 10 years and 20-year period, over the 3-year period, gold has returned an annualized 29.6% versus 10% for 11% for Sensex. So 10.7 for Sensex, 29.7% for gold in a 3-year period. So 50% 1 year, 29% 3 year, right, against 10% of Sensex. 5 years, metal gained 16.5% against 16.1% in Sensex, right? So even in a 5-year period, gold has literally gone up. Now over 10 years, gold delivered 15% compared to 12% for Sensex, and 20 years 15% against 12%. So in all time horizons, gold has literally gone up. What that means is there is a signal that the financial world could melt down sometime, because if there's so much of activity happening as far as gold is considered, you can expect something the risk boiling. Now, if you would have listened to Mr. Ray Dalio, the founder of Bridgewater, right? He's been talking about US getting de-dollarized. According to him, US should have been de-dollarized already, like a quarter away, right? So according to him, US should go through a depression, and once that happens, gold is where the money is. So he's been stocking on gold. Even Mr. Nassim Taleb says, what that means is, what these people are saying, that while gold might not be able to sustain the returns, right, as much as what we discussed, it makes sense to stock the gold as a hedge against some weird black swan event, tail swan event, right? That's what Mr. Nassim Taleb says, right? A black swan is something that happens tomorrow and you don't know anything, right? You don't know what happens and it hits you. So what people are saying, it makes sense to keep like 10 to 15 to 20% gold as an allocation, not for the returns, right? Not for the returns, but for future screw ups. So if something blows up all of a sudden, right, you will have gold to sort of cushion the blow. Because equities can like literally fall 50%, 60% tomorrow, right? When I say tomorrow, it's a figure of speech, but you get the point, right? So that's what people are saying. It makes sense. It totally makes sense. Something can happen, anything can happen. You don't know what happens. And gold becoming so valuable and it's just getting piled on by every central bank of the world, including India, right? They're not stopping. Even the prices of gold, even when the prices of gold have been so high, they've not waited for dips, right? They've been adding gold, man. All of these people, right? So if that is happening, these people are preparing for de-dollarization, right? If they are preparing for de-dollarization, you've got to prepare it too. We've got to prepare it too. So that's that. Moving on. Does that scare you? Does that scare you? Is it scary to know that, it's so possible, it's so likely that everything can get screwed tomorrow? But that's how life is, right? That's how life is. I mean, you've got to be prepared for the eventuality. That's Mr. Nassim Taleb's life's work. That's what he talks about. Black Swan. Have you read Black Swan, by the way? Inserto, Black Swan, Anti-Fragile, Skin in the Game, Fooled by Randomness, right? All of these books are based on this particular principle, right? The tail risk. The tail risk is something that you've got to prepare for. Otherwise, everything gets screwed. A good news for the defense sector though. Relief for companies, R&D delays, 5-year order issued. So, first major overhaul of rules since 2009, plan to revamp DAP for capital purchases underway. So, capital purchases is basically when they're actually buying equipment, right? So, companies facing delays during development phase of prototypes for the armed forces have gotten a big relief, with the government abolishing fines and reducing liquidity damages, LDs. So they're reducing liquidity damages by half for delays after development phases as well. So I don't know why, but the government is essentially incentivizing the defense firms to delay things, right? By taking this deterrence away from delays. Maybe they have another strategy. Maybe they want to don't hurt these people financially. They want to have that sword away. But if you remove this deterrence, of course there are going to be more delays, right? But for now, it becomes a very good news for people like HAL and so on, BEL and so on and so forth, BHEL, because they won't have to pay penalties for whatever happens, right? So that's good news. The rules will deal with revenue procurement worth close to 1 lakh per year, 1 lakh crore per year, and a new procurement manual has been approved to streamline and simplify procedures. So that's what they're talking about. It's not happened since 2009. So that's pretty huge. This is a big development, right? Pressing need for this manual to be aligned with latest development in the field of public procurement, new age weapon system. Given supply chain issues and challenges of development modern equipment, several companies faced fines and levies if initially identified timelines were not met. But that should be the case, right? Why would you incentivize a company to not abide by the initial timeline? Because they say that with research, you find out that it's difficult to assume. It's a large PL impact for all companies, will be a relief for all manufacturers. Yeah, exactly. Miss Shivani Rajgharia. You're right. You're right. So, minimal LD at point 1 will be levied post development phase of the prototype, which is great news for these people, right? Rules will be provide assured guarantee of orders in terms of quantity up to 5 years. In special circumstance, industry can also guaranteed orders for next 10 years. So defense needs all the support the country can give, the government can give. We've talked a lot about this and in depth, and everything that the government is doing is moving in that direction. Does that move? Does that mean that in February during the budget announcement, they're gonna increase the defense spend as a percentage of GDP? Very likely, very likely. Good news for defense stocks. Maybe this is why defense stocks went up on Thursday and Friday. Did you see that? On Friday, HAL essentially went up 4%, GRSE went up 10%, NASDAQ went up 4%, right? 5% or something of that sort. Now, this is huge movement, right? Defense index, maybe the market already priced it in, right? And that's what we discussed. This is why intraday trading is not a good idea, especially if you don't have some inside information, because whatever you read today might have been priced in yesterday, and you end up holding the tokra, right? So moving on. Edu ministry flags learning gaps drop out as hurdles. Well, of course, India has a problem as far as the skill development industry is considered, right? We have 90% of people are not 12th, like they haven't crossed 12th standard of working age population, and 50% have not crossed 5th standard, so they're basically not educated at all, right? So that's a big problem, very big problem, but they're trying to solve it. So they say that one is this education ministry, right, and other is the skill development ministry. So they're trying to basically measure employability. So what they're doing as employability is some vague measurements of characteristics such as learning ability and so on and so forth, and they're trying to create that database for policy making purposes. I think that data is too gray, but anyway, they're doing it. So, and this education thing is also a problem, so they're trying to solve it. This is the biggest problem. Everybody says, the government wants to believe that India has a demographic dividend. We have a lot of young people, but what if those young people are not educated at all? What if the 90% of those young people simply are not graduated from school? What do you do then, right? Moving on. SpiceJet is falling apart. Literally, I saw a video where a SpiceJet flight had to be emergency landed in an emergency situation, because while it was taking off, a tire literally fell apart. I mean, I don't know if you saw that video, but the whole thing was going on and a wheel literally broke off from the runway, right? It was very scary. But they're adding 25 aircrafts at attractive rates at short-term leases to make up for the winter plan. So October, November, December, this is the highest revenue time for the airline industry. SpiceJet obviously doesn't want to lose it, and since it can't get long-term leases, right, it's getting planes on short-term leases. 25 aircrafts will reduce ops during lean period. So it's trying to make way. It raised 3,000 crores, but all of that basically went into statutory dues. Not a lot of money it has, right? But they say that we've gotten a very good deal, and it's almost as good as a long-term deal, and we just need to float the boat for this season. Very, very unlikely, or very likely, that SpiceJet actually falls apart, and ends up going down. But if it doesn't, there's a chance that it doesn't, right? There's a chance that it survives. You've got to give credit to the management, right? Speaking of management, the MD took like a 30 crore, advance salary. So that's very weird, right? So it doesn't. A lot of things are. If you were to look into the future, you'll say that this company is not gonna make it, but you got to wish them luck, right? A good airline, or let's say an airline exiting the Indian market, is bad news for the country. So all the best to SpiceJet going through tough times. Moving on, what's going through tough times is also the film industry, right? They came out with a free movie ticket offer, right? It's called BOGO, buy one get one offer. Now buy one get one offer is also not being able to attract people, because of it's been seen as a push to get people to watch bad films. So people are getting they're averse to the idea of buy one get one offer, especially on new movies, which is so buy one get one usually got like 10-20% more crowd, and 10-20% more revenue opportunities, and then there's a downstream revenues, right, which theater guys could have, but that's not happening, and it's proving to be a bit of a trouble. Speaking of the film industry, what has worked for Mr. Khan, Mr. Amir Khan, has the pay-per-view model of YouTube. So he says that we've been able to, he didn't disclose the numbers. He said YouTube doesn't disclose numbers, so I won't disclose numbers. But he said that we've been able to generate 20x what we could have during secondary sales of Sitare Zameen Par, that terrible movie, which was copied by Champions in the Hollywood movie Woody Harrelson, which was itself copied by, which was a remake of Campions, an Italian movie. It's this same movie has been made 5 times, but apparently he could sell, it on YouTube, which is great, which is awesome, which is beautiful. The scene is that, as Mr. Bijli said, right, in order to monetize movies well, you've got to keep OTTs as the last option, right? Last option. You cannot let OTTs kill the hand or hurt the, cut the hand that feeds you. The hand that feeds the movie industry is cinema, is theater, right? You got to have people coming to the theater. So what do? You increase the timeline till the time a movie actually comes on OTT. That's number one, right? So you have a cinema run, you have that large cinema run. After 3 months of that cinema run, at least, that's what Mr. Bijli said, you come on a pay-per-view model, right? At least 3 months. You let that he said 6 months, maybe 3 months. So he said, after that pay-per-view for 6 months, pay-per-view is when you actually buy that movie. That's when you come to OTTs after basically 9 months or a year. That's when you're gonna make money on movies. If you sign deals with OTTs, you're basically signing the deal with the devil, right? And he's absolutely right. OTTs are gonna kill the film industry forever, if AI doesn't do that. Moving on, ITC Foods to ride the quick com wave in a fresh pack foray. So ITC is venturing into the fresh foods play, right? This has a shelf life of 1 to 5 days instead of 6 to 9 months or 12 months, which FMCG companies usually deal with. And FMCG channels are obviously, this quick com channels are obviously going to be huge. But in order to balance their rhetoric, because ITC cannot say that, hey, we're going to go quick commerce and, this is where we are bullish at, because it's going to attract a lot of scrutiny. So why they're saying we're not just going to be on quick commerce, we're also going to move to retail and so on and so forth after the demand is set. But the demand for this thing is very limited. So these people are also very, very easily, cutting off the retailers, which is not good. Moving on. Tata has bought German company Estech for 750 crores. Tech portfolio. E-commerce firms festive gig hiring spree weak in due diligence. So we've talked a lot about how the temp hiring has to be enhanced during the festive season. It puts pressure on the supply chains, but you got to do what you got to do, right? So a lot of temp hiring happens during festive sales season, which is like a quarter, October, November, December, concentrated way. Then comes January, February, it tapers down. So ideally it's supposed to start from, let's say, August, September, October, November, December, January, and then February, right? That's where it's gonna end. But the core months are 3 months, for which a lot of temp hiring happens. And a lot of temp hiring in this the delivery play happens without due diligence, right? Then what happens is people get sexually harassed, and people get scammed, their food gets eaten, the deliveries get stolen, and so on and so forth. That happens because of lack of due diligence. Obviously, when you scale something so quickly, it leads to some problems. And these are the second order effects of quick hiring. they are basically trying to clip that, but they won't be able to, because this is the nature of sudden bursts in activity. That's the problem. That's why I said, right, you remember with that discussion where concentrated bumps in demand just strain the supply chain without actually adding to its strength, right? So they'll add a lot of redundancy, and then that redundancy is taken back, so the thing comes back to its original position. But it, since the stressor is important, it makes it robust, the system. But otherwise, it's not that great news. Moving on, REIT is gaining currency, equity currency, to unlock rush of funds. REIT is real estate investment trusts. They're separate from InvITs. InvITs is investment trusts, right? So REITs are gonna go ahead by SEBI to get treatment as par as equities, at par with equities. So that's gonna have a good fund flow coming to REITs, and then of course real estate banks. Real estate companies. So that's very good news. Infosys buyback cheers market. Tax bite looms for investors who got the buyback. They're looking at some tax. Why did Infosys buy its share back, and so on and so forth? It's an interesting play for which I've recommended a very good book called Outsiders. It focuses on Mr. Warren Buffett's view on the stocks and how to juice them out to the max. Right? Buybacks is a very good technique when a company feels it's undervalued, and if a company wants to avoid a hostile takeover, right? Because let's say if your stocks are out in the market and they're suddenly less valued, right? You become a ripe target for a hostile takeover, right? You don't want that. Nobody wants that. So what you try to do is to try to avoid that. And how you can avoid that is basically through buyback, right? So it becomes a technique for you to actually avoid an unwanted hostile takeover. Also, it signals confidence in your stock. So you reduce the floating stocks in the market, improves your earnings per share. If you're improving your earnings per share, signals good strength. Two ways to do buybacks. One is an open market transaction, OMO, right? And one is a bid. So Infosys used the bid play. So a lot of things as far as this buyback play is considered. Speaking of IT, we've talked about IT a lot for 112 episodes now. This is the 113th. We said in the beginning of our Thinkers Frequency that IT is gonna face very, very tough times, and people are not being honest as far as prospects or IT are considered. You remember that we said that. Now a very big proof has happened of that particular prediction, right? IT companies are looking at investing in semiconductors, the semiconductor play. How does that sound, guys? This is extremely interesting. This is one of the most interesting things you could read. IT companies are looking at getting into the semiconductor play. Why would IT industry or IT companies, the big ones, get into semiconductors? Because it's a pivot. So it's a $280 billion pivot, right? So they are looking, because semiconductors are seeing so much of action, and semiconductors are seeing so much of investment action, consumption action, and everything is AI right now, right? And de facto everything, if it's AI, everything will be semiconductors, right? So they are essentially pivoting and investing in semiconductors and getting their engineers working, or at least exploring that as an opportunity for pivot. How does that sound, guys? So this once again proves our prediction that IT companies do not have that strength as far as their core business model is considered, and it's good that they're pivoting. Now these people should have made these investments on all these 40 years, right? But they just sat on cash. They just kept sitting on their cash, milking the cash cow, just growing it. They didn't invest in anything. They didn't build anything, right? Unfortunately. So now they're finally doing it. It's good news, right? Better late than never. It's great news. If Indian IT can actually make substantial investments in frontier technology, it's very good news for the people it has on roll and right now, right? Otherwise, those people will lose their jobs. So it's on the leaders of the IT, industry to actually have the vision and foresight to absorb the people they have on roll right now. Because if they stick to the current model, All of these people will be fired en masse, right? They don't want that. Nobody wants that. Their families wouldn't want that. So it's on IT companies to figure out a way. And the way that they're finding out is investing in semiconductors. Moving on. Improving sentiment may take Nifty towards 25,000. So that's cool. Miss Shivani Rajgaria has written something. Also, large order books from government. So yeah, you must be talking about the defense play, right? The defense is all about government spend and also exports, but government spend mainly. Moving on. Festive offers tax cuts to fuel retail lending by banks. We've talked a lot about that. So we want, unless somebody wants to understand, retail lending is gonna, big consumer facing banks are boosting their retail exposure after a brief lull. Yeah, we've talked about this enough. India Inc. veers away from debt markets as bond yields harden. So you know what happened? The bonds became very attractive, right? Because of the sovereign upgrade and so on and so forth. But then they became active, and a lot of bond action started happening, and then yield started hardening, right? Now yield started hardening. So what companies started doing was they started going away from bonds again. So this is the kind of activity which keeps happening, right? So India Inc. veers away from debt market as bond yields harden. Short-term corporate borrowings fall to 7-month low in August, and they might just go back to banks if this continues, right? So this is slightly good news for banking. Moving on. We've already talked about Fed. Some geopolitics. Interesting stuff is happening in US after Mr. Charlie Kirk's assassination. Rest in peace. So when that assassination happened, a lot of people from the left, from the opposite side of the spectrum, started celebrating his death, right? So they started posting videos where they were celebrating how he's been killed and it's great and so on and so forth. Now what happened was, again, this is very, very unique, but the American right essentially started complaining against those people, and they started asking their employers to fire them, right? And all of those lefties have started getting fired, and which is unprecedented. So cancel culture, this is cancel culture flipping this side. Earlier, you used to be cancelled for, let's say, supporting Trump, right? Or supporting right-wing ideology in US. If you are in a US university, if you are in banking, if you say something against the left policy, let's say vaccine policy, you used to get cancelled. People got fired for not taking the vaccine, right? People got fired for speaking against the vaccine or saying that the vaccine, they would prefer to not have vaccine. They got fired. They had their airplane tickets cancelled. They weren't given food at restaurants without a vaccine certificate, and so on and so forth. And a lot of things happened as far as cancel culture is considered, right? This is where the cancel culture has flipped, and it's the right talking to these people that, hey, you were celebrating somebody's assassination, you should get fired, right? And cases of this have been piling up in an unprecedented fashion. So they're checking everything, they're checking social media, and they're saying that this guy needs to get fired. And companies, for a change, they're just firing them. They're not standing by something like that. They're saying sure. So there was one company, right? I'm forgetting the name of the company, but it's a very interesting case. So there was this supervisor who was not, so it was Home Depot, right? So it was not really printing a t-shirt for Charlie Kirk or something of that sort. So they refused that. The guy found out that guy, got him fired. And then there was this associate of that person who was just waiting and watching, right? Who didn't interfere. The boss was refusing. He was obeying. He says, you need to fire that guy as well, right? Because he didn't say anything for the support of the customer in this time. And that guy got fired as well without answers. So people are like, hands up, and this is very, very interesting ramifications happening in US. Moving on. A lot of money going from BlackRock to UK in data centers. Mission to tackle skill gaps, empower youth in works. Plans underway to introduce national employability measure. This is what I was talking about. Speaking of employability's GCC ecosystem is getting a boost. CII is looking at raising the GCC ecosystem to $500 billion by 2030. Right, that's pretty incredible. 470 to 600 billion to India's GDP by 2030, and they want to grow GCCs to from 1,800 to 5,000, creating 25 million jobs. Right now, GCC hires like 5 million people. I recently had a discussion with a VC. I was pitching my company, and he says, "Hey, nobody's gonna hire anymore because people are not hiring anymore, right?" And I'm like, it's easy to bullshit on a macro level. When it comes to nitty gritties, you must be talking about IT companies firing, right? He said yes. And I'm like, why didn't you talk about GCC companies hiring, right? So things are always more complicated than on the onset, right? Moving on. There's a lot of PLIs that are going to white goods. White goods is heavy machinery like ACs, washing machines, and so on and so forth. Moving on. It's very interesting. Monsoon withdrawal has begun 3 days ahead of schedule, says IMD. Monsoon withdrawal has begun. What do you think is going to happen with monsoon withdrawal beginning? So it always has a lot of interesting ramifications, right? Monsoons came early. You remember what happened? Right? Because monsoons came early, people didn't buy ACs. People didn't buy fans. People didn't buy refrigeration. People didn't buy ice creams. Right? All those stocks went down because monsoons came early. What do you think happens if monsoons retreats early? Right? This is something that we could predict. Right? India has witnessed above normal rainfall with some regions, including this, reporting flash floods, landslides. Monsoon provides 70% of yearly rains. It's very interesting to understand how this is going to actually affect the business market. If monsoons retreats early, what do you think is going to happen? How is it going to affect the market, the industry? One thing I can see is that it's going to help the logistics play, right? It can help the logistics play because rains affect logistics, and if rains draw down early, it will help the logistics play. It will also help, the travel play, the, let's say, aviation even, right? But definitely travel, right? Travel gets affected. Tourism definitely gets a very, very big boost because rains have been destroying tourism, especially in the north. So if monsoon retreats early, it's going to be good news for hospitality sector, tourism sector. So Cox and Kings, these people are going to be happy. Hospitality guys are going to be happy, especially in the north. Travel is going to be happy. Tourism is going to be happy. Logistics is going to be happy. What else? What else is going to be happy? Interesting to think about, right? Retail should also be happy because monsoon essentially affects how retail functions, right? People don't go out to shopping malls because of rains, right? So if monsoon gets draw down early, there should be some positive sentiment for the retail market as well. Way to look into the future. Moving on. Chip electronics foray to glide over gun. IT's India IT. We've talked about that. Semiconductor AI infra to get big chunk of the new tech fund, IDTA, right? Deep tech fund. It's gonna get investors bet 235 million on bringing AI to scientific research. That's okay. We've heard a lot about that. Yeah, folks. With that, we come to the end of the 113th episode of Thinker's Frequency. 113th episode. Our daily mental workout. Our daily dose of insights and analysis which don't lead to paralysis right before we punch in. It's 9:16. We should punch in anytime soon. I wish you a beautiful day personally and professionally. I hope to see you tomorrow. same place, same time. Have a beautiful day. I'll thank Ms. Shivani Rajgaria, Mr. Tushar Tiwari, and everybody else who joined. Thank you so much. See you. Bye bye.